British startup Checkout.com has just raised new funding that tripled its valuation to an estimated $5.5 billion. Checkout.com does what it says on the tin. It provides the digital platform upon which merchants process their online sales. Transactions on the site surged some 250% between May 2019 and May 2020 as the COVID-19 lockdowns led to an e-commerce boom. Joining us now is Guillaume Pousaz. He's founder and CEO of Checkout.com, and he joins us now. Great to have you with us, sir. Explain Checkout.com in your own words and what kind of clients you're helping here.
We've always focused on enterprises, so we help innovative and global brands to process payments all around the world. It would be companies like Klarna, Farfetch. We do a lot of luxury, a lot of fintech, Adidas, Samsung. And fundamentally, we help them taking payments all around the world, and we go extra granular with data and insights for them. So it's a very different kind of value proposition than a Stripe, for instance.
Okay, so I just mentioned the 250% increase in sales between May of this year and May of last year. Just hone in, if you can, for me on what you've seen since the outbreak of COVID. How much of this is just increased transaction volume for individual customers versus new businesses saying, hey, I need help getting online?
So we have two tailwinds. We have obviously all the net new volume that has been coming with us over the last 12 months because, I mean, we went from like being, a fast-growing company but mostly unknown to one of the largest fintechs in Europe last year when we raised a $230 million Series A. On the back of this, I mean, 500 new enterprise clients. These clients are obviously ramping up. Now you combine this with COVID-19. You will have obviously music and television subscriptions. These are public companies, so they're growing very fast on the back of COVID-19. There's an acceleration there, food delivery. And I think the opposite is obviously everything that has to do with mobility, travel, experiences, ticketing sales and things like this have slowed down quite drastically. So they're trading at 10% of where they used to be. But it's overall the business has been a very good for us.
Do you think you can sustain this? Whether it's the volume of traffic that we're seeing from businesses as they're trying to shift more of their business online as we stay at home and shop more, or do you think we see a petering out again as we try and get back to some normality and we see reopening continue?
I think we always had this thesis that, the world is transforming. People call it the digital transformation. We just call it, the global transformation in the world we live in the sense that people are moving from offline to online. I look at my kids, they use TikTok in a way that, I couldn't imagine myself. So I think new generations are just used to live online and kind of, transact online. So we are firm believers that the world is only going into one direction, and that's more online sales. Will we see a bit of a slowdown on the acceleration? I think this is, $1 million question to which I don't have the answer. But clearly, when we look at our own models and forecasts, I mean, the business is about to triple in the next 12 months again. So I think we're pretty optimistic about the future.
Wow, a tripling of the business again in the next 12 months. All right, then on that line, talk to me about the $5.5 billion question then, maybe, going public. You've talked about potentially listing in the United States. Why listing in the United States?
I think, any tech company wants to list on Wall Street. It seems like probably not any tech company, I'll speak for me. But I think, when you've worked 15 years into a company trying to build something, Wall Street seems like the right way to go. In terms of timeline, we raised a Series A last year. We're raising a Series B now, but just now. So I think it's like speaking about an IPO right now. It's a natural step for a company of our size, that's for sure. We're profitable. We've been profitable for many years. We're growing really fast, like we kind of mentioned. So fundamentally, the IPO is a natural step. But I think I'm not ready to kind of commit to a timeline. What I would say, though, is that Wall Street is obviously an exciting place to do it. And, hopefully we'll be there one day. As far as the Series B is concerned, Coatue was a bit of a natural fit for us. Three things, actually. First of all, they have a strong Silicon Valley DNA, which was something for us that was really important because a lot of our clients are in the Silicon Valley itself. Second of all, they understand China really, really well. It's a hedge fund that had an exposure to China for many years. The CEO of Philippe is on the board of ByteDance. So I think they truly, understand that market. And third, their data science team is one of the best we've seen in an investor. And we are, extremely data-driven as a company. So I think there was just like a natural fit there. And we're super happy to have them as an investor.
Good to know. I guess I'm asking as a Brit in terms of where you're listing, quite frankly, because I just want to see, European talent as well rising at the same level as the United States in terms of the technology as well. I want to get your view on Wirecard. What do you make of Wirecard, and do you think it's cast a shadow over fintech, maybe specifically the payments industry and the sort of scandal that we're seeing?
So Wirecard was always a bit of a mystery, at least for me. It's a company that had a giant market cap up to 2 years ago, but you would never see them anywhere. I mean, we never had a client come from Wirecard. You would not see them in RFPs. I mean, we see, some of our competitors like repeatedly, and I mean, who they are. It's Stripe and Adyen, but we don't see Wirecard. We've never seen them. And as a matter of fact, it was this company was always a bit of a mystery for us. It's hard to speculate on what exactly happened over there, but I think we should not put all the companies into the same basket. And, payment companies like ours, we see regulation and compliance as an opportunity. You were mentioning Europe. Europe does that really well, imposing compliance and regulatory requirements on people, strong customer authentication, for instance. We talked a lot about it last year. This is a true opportunity for us to actually, build technology that is useful to merchants. Same thing for marketplaces that in Europe have certain kind of, regulatory requirements. So I think it's too easy to say that there's a shadow on payments in general. There's plenty of good companies in the payments industry, and I think we should focus on that.
It's interesting what you say though about regulation and the regulatory environment, because this does look, and we're obviously speculating on actually what happened here, at least for now, a regulatory failure if this $2 billion is indeed missing and never existed. Do you think as a result of this there will be greater regulation specifically on this sector?
So I think the real question is it a regulatory failure or is it an auditing failure? I think I don't work with BaFin. We work with the UK regulator in Europe and the French one. So we have 2 licenses as part of our Brexit contingency plan. So we don't have really experience with the German regulator, so I couldn't really speak for this. But I think, the questions are probably elsewhere. Yeah,
it's a really important point. Guillaume, great to have you with us. Thank you so much, and keep in touch, please, on that timing, especially with regards to the IPO. Thank you.
Thank you very much, Julia.
Founder and CEO of Checkout.com.